If this is the best they can do, it looks like trouble. What's up, everybody? Welcome aboard to Bubba's Daily Update. And if this rally today, now I'm taping this, I just finished Fox. It's about 2:30 Eastern time. If this is the best they can do, get a moderate rally on very light volume after last week's debacle, then and it just shows me that the markets are in even more trouble than I thought they were. If we're going to continue to worry about what Jerome Powell is going to say on Wednesday, I think that shows a lot more problems as well. So I think what you're talking about here is a market that is having a dead cat bounce, Santa Claus rally, whatever. And of course, we could go a little bit higher from here. I would have no doubt. But again, I think this is the rally, and we want to look to be sellers of these rallies because I don't see anything getting any better. We've got interest rates rising, corporate debt at all-time highs. So if their rates are going to go up, that's going to squeeze their profit margins. If employment is going to continue to be strong, that means they're going to pay more wages. So all those things line up to less profits. So if we've been rallying all this time supposedly on great corporate reports, they're not going to be very good going forward. They have to, somewhere it's got to give. Now, of course, I believe, and I think all of you believe, the best thing to do is we could just get into a free market system instead of worrying on what the Fed does and let interest rates and everything else price themselves. But at the end of the day, I think you're looking for a pretty big bruising. And the more we try to buoy this market from here, the bigger the sell-off is going to be. And right now I'm looking for, in my own opinion, 25 to 40%, and I can't say when it's going to be, but over the next, let's say, year and a half. But again, I think we're going into a bear market. I think it's going to be very severe here, the way things look at the moment. So we'll see how it plays out. But in the meantime, bonds are pretty much a little bit lower today, means that interest rates are a little bit higher. We've got gold pretty much flat. Oil, okay, oil rallied $1.50, and everybody's cheerleading like it's going to the moon. Can you tell me oil was down about 11% last week, so we get a 2% rally? Is that good? I would call this pretty much of a not a very good dead cat bounce. And again, unless oil continues to rally, which I don't think it will, I think it could see maybe 54. I think you continue to look to sell oil. I think we're going into the 40s. We almost got there last night when we hit 50.10. But we've got everything going on that doesn't look great. Right now, the grains don't look great. We had corn under a little bit of pressure. Soybeans got clobbered. Wheat actually rallied a little bit today. But again, we're still bullish, the grains and the livestock. Cattle was pretty much flat, right around the flat line, just down a little bit. And of course, hogs got hit a little bit, but no surprise. They had rallied huge. And of course, there's going to be some profit taking. One thing we have to always remember is the markets don't go straight to the sky. They don't go straight down. There's going to be some trade in between. And I think the type of action we saw today in the meats was fairly healthy. Not so great in the grains, but again, I still think that they're going to go higher. But again, the actual action in meats was very healthy, I think, when we look at it. So I think that looks really good. The Bitcoin had a little bit of a rally today, but it's in trouble, and there's people that think it may go into the 2000s. And it may very well. Again, I'm not telling you to go out and buy it. I'm not telling you it's going to be great. I'm thinking, in my eyes, it's a long-term play. Because, again, I look at certain things, and even in the equity market, as I mentioned here before, I know, or I feel, and I've seen by proof, the markets will go up 8% year over year. It doesn't mean they're going up this year 8% or next year 8%, but over time, they will average an average return of 8%. That has been in history. So again, I think it's time to quit worrying about what the Federal Reserve does. I think it's time to quit worrying about everything and really end the Fed. And let's let the free markets, just what Trump is trying to do, except for his interference with the Fed, but he's trying to get free and fair markets. And I think if we can get that, I think we've won the battle and we move on forward, because our whole economic system should not be manipulated and controlled by the Federal Reserve, which is a private corporation. But again, so I think that the overall picture does not look good. I think as long as we see low volume rallies that are sharp, I think those are the rallies to sell, and we will continue to sell rallies until something else changes. In the meantime, as always, I thank you for being here at Bubba's Daily Update. Hope you all had a great Thanksgiving. And remember, this has been brought to you by our friend at Advantage Gold, Adam Barata. And if you want to get a copy of his book, Gold is a Better Way, all you have to do is go to BubbaTrading.com/gold. And of course, don't forget about our high school investing program. If you'd like to help us out, go to Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. And of course, football, well, we had a winner. It's about time. Tonight, again, like Houston, just a little bit. So we'll go ahead with Houston, and we will see you all here tomorrow with Bubba's Daily Update. Have a great day, everybody. Thanks so much. We'll see you later.